So after yesterday's decline of over 5%, Tesla stock is currently up over 4% based on this news.
New delivery figures out of Tesla and Rivian this morning. Phil LeBeau has those numbers for us. Hey, Phil.
Hey, Wilf, let's start first off with Tesla. The reason shares moving a little bit higher is because the delivery numbers for the second quarter, not as bad as many analysts were fearing. For the quarter, the company delivered 384,122 vehicles. That is a little shy of estimates, but not as bad as some were predicting. There were some analysts saying, look, it'll be 355, maybe 360. Nonetheless, a decline of 13.5% compared to the second quarter of last year. For the first half of the year, as you take a look at the annual deliveries, and remember, they delivered about 1.89 million last year. First half of the year, 720,803 vehicles. Do the math here. They're going to need to come up with, about 1.15 million in order to increase over what they did last year. A number of analysts think it'll be closer to 1.65 million. But there is also some good news out of China. The company reporting June sales were up little under 1%. That is an improvement compared to 5 straight months where the sales were declining year over year in China. Does that mean that they have stabilized in China? We'll see. But for now, 1 month is better than seeing another monthly decline if you are a Tesla shareholder. Don't forget that as the company moves forward in the next few weeks, we are likely to get the, I think it's going to be in the third week, the Q2 results. And that will tell us just what kind of pressure the company is seeing on the bottom line.
So after a beautiful bounce off my support zone at 290, which includes the prices of 294 to 289, Tesla is now back above resistance at 306. If buyers can keep the price above 306, I want you guys to look for a run to 322. And if they can break above this zone, we'll most likely see a run towards 343. Now, should the stock fail to stay above 306, I want you guys to look for a pullback to 290 and possibly to 277. If that happens, we're looking at a decline of over 11%. Now, this morning we had a weaker than expected ADP jobs report showing that we do have some sort of slowing in the economy, with small businesses losing over 47,000 employees. Let's now go ahead and take a listen to what this analyst had to say.
The one and only Rick Santelli joins us from the CME for his reaction to those numbers. Rick, you've been looking at them, listening to Mr. Leisman. What's on your mind?
Well, I mean, definitely it's the worst job creation from ADP since March of 23. That's a pretty good stretch of time. We all know that the labor market, at least purported by all the experts, economists, and Fed personnel, is just kind of a ticking time bomb of slowness. It's going to definitely slow down. It's just a matter of when and what the rate of change is going to be. I don't know that I agree with that, but I do agree that the glide path is going to be headed down, but I think it's going to be a long glide path. And the relationship between ADP and the Labor Department's statistics that we'll be seeing tomorrow, as Steve adequately pointed out, there's a wide spread there. When I look at what happened with Jolts yesterday, when I consider most of the press and headlines over tariffs and the current administration's policies, it doesn't shock me that there may be more uses of the word firing than hiring. But maybe it's the contrarian end of this that we should pay more attention to. Maybe we should learn a lesson about what the equity markets did, about the kind of counter-trend rally we had that briefly pushed yields down, although I think that much of that may be in the rearview mirror. Ultimately, I think it's easy. Yes, I think the best days of the labor market are behind us, but I do think that there could be a resurgence down the road for a variety of reasons after we hit maybe a small speed bump, and I think that's the real issue here. Are we going to get a genuine slowdown or a small hiccup? I'm in the latter camp.
Now let's take a look at Bitcoin. So currently Bitcoin is up over 3%, breaking above resistance at 108. If buyers can keep the price above this zone, I want you guys to look for a run to 114. From current price, that would be an increase of over 4%. Now, if buyers fail to keep Bitcoin above 108, we could see a 2% decline back to 105. Let's now go ahead and take a look at Apple stock, ticker symbol AAPL. So today the stock is up over 1.5%, retracing back to the upside after its recent decline. Current resistance as it stands right now for Apple is going to be at 211. If the stock can get above this zone, then look for a run to 222. But if it fails to get above 211, then I want you guys to look for a pullback down to 204. With that said, if you guys like this video, go ahead and leave a thumbs up and let's help this channel grow. As always, thanks for watching, and I'll see you guys in the next one.